As Palantir is now above $100, is it the right time to buy? Here's what you need to know before making your decision. Palantir absolutely crushed its earnings report, sending the stock soaring 23% and breaking above $100 for the first time ever. We're talking about a company that's now worth over $253 billion, making it the fourth most valuable company in the world. Pretty impressive, right? Now, I spend a lot of time on social media, and let me tell you, this move caught a lot of people off guard. I've seen prominent analysts and influencers who are calling for a market crash getting completely blindsided by this rally. First, it was DeepSeek that was supposed to crash the market. Then it was trade tariffs. But here's the thing. We're in the early stages of an AI revolution, and thinking a crash is imminent is being very short-sighted and is more an ego play rather than based on any good analysis. People would rather try to be right than make a profit, which is a dangerous game to play, and many end up with egg on their face. I say keep it simple and follow the trend, which is very much bullish. Palantir crushed expectations, reporting a 36% year-on-year revenue jump to $828 million, beating estimates of $776 million, with an adjusted EPS up 75% to 14 cents, all surpassing projections. But what's really interesting is where this growth is coming from. Their US commercial revenue shot up 64% to $214 million, while government revenue grew 45% to $343 million. This tells us something important. Palantir isn't just a government contractor anymore. They're successfully expanding into the commercial sector, and their AI platform, or AIP, that launched in mid-2023 is really starting to pay off. Now, looking ahead through 2025, Palantir is forecasting revenue of around $3.76 billion, which is actually above what analysts were expecting. Their free cash flow is looking healthy too, $517 million in Q4 alone, with a 63% margin. For the full year 2024, they generated $1.25 billion in adjusted free cash flow. These aren't just impressive numbers, they're signs of a company that's doing very, very well, particularly when it comes to execution. Now, here's where it gets interesting for us as investors. Since setting record highs in November, Palantir has climbed almost 146%. That's a massive move, taking Palantir out of a 4-year sideways market. We could be seeing the first major growth phase for this stock. But here's where we need to be smart about this. While we could see Palantir push towards $150 or even $200 through 2025, we need to be prepared for what's called a pop and drop. This is where a stock breaks above a major level, in this case $100, but then pulls back to fill the gap. For Palantir, this could mean price pulling back to around $85. What we ideally want to see is the stock using the $100 level as a support zone and building a base there before its next move up. It's also possible Palantir continues setting new highs, but given the size of this gap up and the continued momentum since the gap, what we call a gap and go, we should expect some profit taking at some point in the near future. The key questions are when and how deep will the pullback be? These aren't questions we can answer. Instead, we need to let the stock show its hand and then we react accordingly, and why patience is an important skill to execute at this time. Let's talk about what could drive Palantir higher from here. Their AI platform is seeing massive demand as companies rush to adopt AI-powered decision making. They're positioning themselves as the AI software layer for enterprise and government, which makes them one of the biggest pure play AI investment opportunities out there. But we also need to be real about the risks. Some analysts are concerned about the valuation. A lot of Palantir's revenue still comes from government contracts, so any slowdown in federal spending could impact growth. And while the AI growth story is compelling, they need to keep expanding their commercial business to justify these valuations. Here's the bottom line. One of the first rules of investing is to ignore opinions, including your own. Don't base your decisions on what analysts are saying. Let the stock dictate where it's going and react to the stock. This is how you stack the odds in your favor of catching a winning stock, by aligning with the market. Right now, Palantir is showing incredible strength, but stay alert for those potential pullbacks I mentioned earlier to around that $85 level. Remember, we're in the early stages of an AI revolution, and Palantir is positioning itself right at the center of it. Whether you're looking to invest now or waiting for a better entry point, keep your eye on that $100 level and how the stock behaves around it. Now, let's dive a bit deeper into what's driving Palantir's success in the AI space. Their artificial intelligence platform, or AIP, isn't just another AI tool. It's becoming the backbone of decision-making processes for both government agencies and commercial enterprises. What makes this particularly interesting is how they're leveraging their experience from complex government projects to solve commercial problems. Think about it this way. When you're building systems that help governments make critical decisions about national security, you develop capabilities that are incredibly valuable for business making strategic decisions about their operations. This is exactly what Palantir has done, and it's paying off in a very big way. Let's talk about some of the strategic partnerships that could further boost Palantir's growth. They're working on integrating technologies from various sources, including potential collaborations with companies like Elon Musk's xAI. These kind of partnerships could significantly expand their capabilities and market reach. What's particularly interesting about Palantir's position in the market is their focus on what I call the operational layer of AI. While companies like NVIDIA are building the hardware infrastructure and Microsoft is developing the foundational models, Palantir is creating the software layer that actually puts AI to work in real-world applications. This is crucial because it's not enough to just have AI capabilities. Organizations need ways to effectively deploy and utilize these technologies. Looking at the competitive landscape, it's worth noting that while there are other players in the data analytics space, Palantir's combination of government expertise and commercial capabilities gives them a unique advantage. However, this is also where some of the risks come in. The AI sector is becoming increasingly competitive, and Palantir will need to continue innovating to maintain their edge. Now, a word of caution about insider selling. We've seen some significant insider share sales, which has made some investors nervous. While insider selling can be a red flag, it's important to remember that insiders sell stock for many reasons, including diversification and personal financial planning. What's more important is focusing on the company's execution and market opportunity, and ultimately how it behaves around this $100 level. If it keeps pushing up, that is all that matters. If you're thinking about investing in Palantir, alongside how price reacts around this key $100 level from a technical analysis perspective, here's what you may want to take into consideration from a fundamental analysis perspective. First, keep an eye on their commercial customer count. The growth in commercial customers, especially those generating significant revenue, is a key indicator of their success in diversifying beyond government contracts. Second, watch their AI platform adoption rates. The speed at which new customers are implementing AIP will tell us a lot about the platform's market fit and potential for future growth. Third, monitor the broader AI sector. Palantir stock often moves in tandem with other AI-related companies, so understanding the sector trends can help you anticipate potential moves in Palantir. Palantir isn't the only stock with the potential for continued growth and strong profits. To discover these kind of stocks, there is a key thing you must do weekly. Watch this video to learn what this process is and how we use it to achieve over 30% annual returns in our stock portfolio.